Okay, well, the HDFC Bank numbers are out, so that's all we have for emphasis, and 2696 crores is where it's coming at. That's bang in line with what we were expecting. We were expecting 2699 crores, and the street was working with a sub 2700 crore figure for HDFC Bank. That would imply around a 21% growth which comes in for HDFC Bank, and no surprises there. They've been doing this for multiple quarters, Anuj, and this is really no surprise. So it's a profit growth of 20% which has come in for HDFC Bank. We'll wait by for the NII figure.
Sometimes I wonder if you should make a poll also for HDFC Bank.
Well, you can actually say it the other way around about how my poll is bang in line with the estimates, but nonetheless, it is quite a healthy set of numbers that we've seen on the bottom line. Profit growth of around 20% which has come in for HDFC Bank. We're waiting by for more details and the asset quality details as well, which should flash on your screen in just a bit. We're waiting for an NII figure, which is also, the street was assuming a growth of around 20% for the NII, which is expected to come in at around 6,200 crore plus, but we'll wait by for the details. But as of now, what we do have prima facie is that they've delivered a very stable profit figure of 2,696 crores, and you really can't quib about it, considering that the premium valuations that it trades at, and it deserves to as compared to the other private banks. So it's at around three times or over 3 times in terms of FI 17
NII is
price
actually
to
way
book.
higher than estimate.
6389 crores in fact is much better. So that's around a 22-23% growth that they've come in at. The net interest margins are at 4.3% as well, and they did around 4.4% in the previous quarter. They did 4.4% same quarter last year as well. So net interest margins maintained. Vaibhav Agrawal of Angel Broking joins in with his analysis. Vaibhav, it seems like it's a very stable quarter, though we're still waiting by for gross NPAs.
Yeah, definitely on the net profit number, it is bang in line with expectations. Even on the net interest income, it's in fact slightly better than what we were building in, about maybe 2 percentage points better than what we were expecting.
For a second, we've got the gross NPAs as well, which will help you analyze it better. It's quite stable, 0.95% on the gross NPA, 0.27% on the net NPA. So there's a marginal movement of, I think, around 2 basis points, which has taken place this quarter in terms of the gross NPA. So 0.95 compares to 0.9% that they did last quarter, and 0.27, which compares to a similar figure that they did in the previous quarter. Net interest margins, to reiterate, 4.3%. Go ahead, Vaibhav.
Yeah, I mean, even on the asset quality, again, first of all, we're talking about very small numbers here, and the few decimal points does not really matter. I think overall it's a steady set of numbers even on the asset quality. So I think overall a well-rounded performance once again.
Okay. What would the details be looked out for in terms of the management? Okay, I think we've got the provision figure as well right now. So that's coming higher actually, Vaibhav. It's coming at 728 crores, which compares to 482 crores year on year, and which also compares to 576.6 crores sequentially. Does that worry you? It's an over 700 crore provision figure that HDFC Bank has reported, but all the other parameters seem largely in line, except for maybe even the absolute gross NPAs, which have risen to over 1,000 crores.
Right. So, I think clearly the provision number is, almost 200 crores more than what we were expecting. But clearly the other line items, possibly on the other income as well as the NII being higher than expected, has helped them sort of, absorb this provisioning number. We'll have to see whether there is any floating provision as well that they've made, or it's entirely attributable to specific NPAs. But yeah, again, in the overall scheme of things, by itself, I don't think this would be too much of a concern.
Okay, so Vaibhav, what's the call on the stock now? Because it clearly is one of the most expensive stocks at current price. What's the call?
Well, in fact, in the recent times, the valuation multiple has come down a little bit, possibly also because foreign investors right now cannot invest because of HDFC's classification as a foreign investor itself. But we are giving a multiple of 3.75 times, and at that level, the target price comes to around 1250. So we have an accumulate rating on the stock.
Okay, the gross NPA I think we're waiting by for the absolute figure, so I'll just wait by for that. Overall, what is your sense in terms of the commentary that you'd like to hear from the management? Because last quarter we had that asset reconstruction, the one loan that was sold to the ARCs last quarter. Anything of that sort that you're expecting maybe, or that you'd like to hear in terms of commentary, or any mid-quarter analysis that you've had on the same?
Well, we would be looking for the broader commentary from the management in terms of, what sort of outlook they are seeing on the growth front, as well as on their overall book, how it is performing. Nothing specific. I think a broader outlook is what we're looking for.
Okay, so overall, the stock is off the day's high. Is the provision enough to worry you in terms of the numbers that they've reported this time? Because remember, last quarter also, the provisions were up quite significantly. It was up around 100% on a year-on-year basis. And this time also, the provisions are quite high.
Yeah, clearly, it's well above their quarterly run rate for the last several quarters. So we would wait for details of, what the breakup of this is. Is it, entirely due to a higher slippage, or, what the breakup is? Before really, concluding whether or not, this would have a negative impact.
Okay, I just want to go back to the gross NPAs. Now we have the net NPAs with us, which is at over 1,000 crores. It wasn't the gross NPA. It's 1,028 crores versus 896.3 crores. So that's around a 14% rise in the net NPAs this quarter. And that compares to an absolutely flat figure in the previous quarter. So if you look at how they've performed on a sequential basis, there's a bit of a come off in the gross NPA as well as the net NPA. Your thoughts, Vaibhav?
Actually, if you again look at it on a year-on-year basis, the net NPAs are again flattish, and they have managed to improve it a little bit. But you're talking about very small numbers here, 100 crores or so. On a company whose quarterly profits are 2,700 crores. So but these numbers in absolute terms are quite small to really go down as a concern for HDFC Bank.
No, Vaibhav, that point is taken, but for a bank like HDFC Bank and the kind of standards that it has set, do you think it would go down as a bit of a concern, especially considering that we've already seen slightly smaller banks actually report asset quality issues? So, would the street see this as glass half full or half empty rather than glass half full?
I think I would maintain my view that this particular slight increase in the net NPAs itself would not be too much of a concern for HDFC Bank, given the overall loan mix that it has. I think it would be again HDFC Bank, IndusInd, these banks are expected to do better because of their retail lending mix. Would not compare them with some of the other smaller private bank results where the NPAs did shoot up because of their more of corporate and SME exposures.
Okay, total restructured loans at 0.1% of gross advances. There is something which the number which hasn't gone down too well with the street, considering that the stock is off the day's high. It could just be profit booking, but maybe there could be some concern which is coming in for HDFC Bank this quarter in terms of the gross NPAs.
That gross NPA point is taken. Also keep in mind that you need big outperformance compared to the estimates for stocks to rally, like you saw with Infosys. For HDFC Bank, the numbers are in line. So really the margin for stock to rally reduces if you come out with inline performance. So that could be one reason. Okay,
so overall, Vaibhav, how would you rate the numbers this quarter?
I think like I said, it's a pretty much inline quarter, again a steady set of numbers, and which is why we're maintaining the target price also around that 1250 level, which implies around a 12-13% upside from current levels.
Okay, so it's a largely inline quarter for you for HDFC Bank. Okay, all right, Vaibhav, thanks very much for that. Well, there is something in the street, something that the street hasn't liked in terms of the numbers, but Anuj, if you look at the gross NPAs, they've reported 0.95%, and you look at what Federal Bank reported, it was a 55 basis point sequential jump that we saw in Federal Bank, 30 basis points for Karnataka Bank. For South Indian Bank, it was up 14 basis points. For DCB, it was up around 20 basis points sequentially. So if you compare it to that, they've stabilized or they've managed to maintain that sub 1% gross NPA figure.
Ekta, if Ravindra Jadeja scores 3 consecutive zeros, you would say that okay, that's fine. But if Virat Kohli scores even 2 consecutive zeros, you can't say that look, the other guy scored 3 consecutive zeros, so he's better. The standard, is much higher in case of HDFC Bank, and everything will be scrutinized. It's a different story when a stock trades at 3.5 times price to book value and when a stock trades at 1 times or 1.5 times price to book value.
Well, to be fair, the other parameters look good, such as the net interest margins, as well as the NII growth, as well as the profit growth. But I think what's gone down not so well with the street is the provision rise that we've seen this quarter, as well as the absolute figure in terms of the net NPAs, which have jumped 14%, and I think for the gross NPAs, which has risen marginally by 6% on an absolute basis. But that's on HDFC Bank. That stock of the day's high, in fact, a percent lower.
You know, and Lata makes a valid point. If HDFC Bank's bad loans rise 6.5%, for industry it will rise to 16%, and that tells you a lot about where the bank nifty could move in terms of leadership, whether it can provide leadership, because the bank nifty is 75% of your private sector banks, and you've seen the reaction on HDFC Bank, at least the first reaction, and that's dragged the bank nifty lower as well, down about 0.5% as we speak. That's entirely because of this perceived disappointment on HDFC Bank's asset quality that we have seen, and the stock now down at low point of the day.
Yes, and now we're waiting by for the other numbers to come out as well. So HDFC Bank not got down too well with the street, but Infosys managing to hold up. Time for a break now, but we'll discuss the commodity slump